Interest costs for America's debt are rising. Analysts point out these higher costs mean the U.S. financial situation is getting shaky. Economic uncertainty means you have to keep up with what's happening. Make sure you subscribe and we'll keep you in the know. From July to October, interest on the 10-year U.S. Treasury note jumped a whole percentage point, going above 5% for the first time since 2007, and staying near the highest levels in 16 years. Why did this happen? The real trigger, according to analysts, was the Treasury's announcement on July 31st about borrowing a stunning $1 trillion in the third quarter. This level of borrowing is unheard of in times without war or crisis, and it doesn't stop there. The Treasury expects to borrow $776 billion in the fourth quarter and $806 billion in the first quarter of 2024, setting a record for these periods. Economist Ed Yardeni observed, the bond market has kind of figured out that government spending relative to receipts is out of control. Japan and China, historically big borrowers of U.S. debt, are now buying less. Japan has reduced its Treasury holdings by 6% and China by 14% since this year. The Federal Reserve is also stepping back, cutting its Treasury securities by about 15% over the past year and a half. Amidst these concerns, Moody's has changed its outlook on U.S. debt from stable to negative. Amid rising interest costs and lack of bipartisan efforts to control spending, we're left with a gloomy outlook of this nation's financial future. We'll be back after Thanksgiving, so enjoy this time with your family and stay tuned for what comes next. I suggest you take the time to learn more about what's really going on in the economy by attending our exclusive one-on-one web conference at AugustaPreciousMetals.com/webconference.